Hi guys, once again this is Alfred from BinaryOptionstutor.com. Here with a support video for the BigDaddy trading strategy. I want to look at a couple of trades really fast. One trade is going to be a trade. Both of these trades came earlier on today, which would be July the 13th. But one of these trades was a losing trade, one of these trades was a winning trade. Now, here's an email alert. We can see this is a dollar CAD. The suggested range was 127.305 through 127.261. Now, this is a call, so we want to get as deep down into the range as we possibly can, and of course try and gravitate towards getting in at the 8 EMA. Rest of the usual data is here. I'm gonna zip over. Here's a chart. That message was forwarded to me from my brother, and that's why you saw those X's in our personal emails. But I had to put an arrow on my chart here at the entry. This candle here marked the entry, and this line right here, which is just above 127.30, that's the actual strike at the time of the signal. Now this X, just like usually in these videos, this marks the exit of the signal. So clearly this was a call, and the market just ran against us for majority of the trade. Now let's look at something here. The trade itself was a weak trade right here. Okay, now you've got choices because these are alerts. These aren't signals. Please don't call them signals. Again, I'm going to stress that. And getting an alert to trade around it, you can obviously, if the analysis, if our little on the fly analysis is giving you weak, then you can elect to not participate at all, and that's cool. But here's another idea, and you're going to have to learn to think of this stuff on the fly, because you want to trade these alerts. You don't want the alerts to trade you. You know, you want to be in control. That's what alerts are about, putting and empowering you guys to be in control. Now, on the fly analysis gave us that this is a weak signal. Obviously the signal didn't work. The easiest thing you can do is to simply ignore weak alerts. Easiest thing you can do. But here's something a little creative that you can do. If you get the signal and you're able to trade spreads, like from my feedback I'm getting from some guys trading the BigDaddy now, one thing that some guys are doing, which I've mentioned several times and I'm going to mention here, would be to take the alerts and trade them using spreads on a product like the Nadex. They call them bull spreads. You can obviously go long or short, but here's a move right here, and inside of that same 15 minutes, these are 15-minute candles, and that's roughly 10 pips. If you were trading spot, or if you were trading spreads on Nadex, that's just a fast snap. It's just a fast snap trade, and it doesn't matter to you what happened at the end, at the exit, if you were going to trade this like a binary. Now, why would you not trade it like a binary? Because it's a weak signal. I mean, when given the signal itself was already being predicted as weak. But let's talk a little about price action. I don't talk a lot about the subjective art of price action reading, but there are some things that aren't as subjective, and anyone that was in the live trading room when we used to do that, you know, I done a whole little ditty on price action. I talk about the things that are pretty, objective as opposed to the subjective points. Here are two wicks. This is a point where we know the market has gotten to this round number right here, 127.30, and we know the market's rejected. So price action is giving us that we could get in at the start of that strike, ride this puppy up to here, and we've got these wicks. These wicks are the protection for guys that are going to get in here and go short. But they can also be an exit for you. They're a great exit because you know that historically, quite recently, in just the last hour, twice you've gotten to this level, and there are some nice long wicks there to reject at that level. You see a weak signal come along. You don't want to play the signal, you don't want to play the signal for the next hour and a half. So you say, I want to just get in here. Maybe I can catch a little snap if you're more aggressive. And hey, there's 10 pips, 15 minutes, 10 pips. I also want to talk about something else, guys. We've got a volatility indicator on our site. If you're participating on a exchange like Nadex, or if you're trading these for spot, and you start to see something like 10, 20 pips in 15 minutes or less, this is a cue for you to exit. Because this type of volatility, that expansion, sometimes it's only going to last for so long. And wouldn't it be better to leave with 10 to 20 pips in hand in 15 minutes than to wait around a few hours for another 5 pips? That's what I'm getting at with that. So, bird in the hand beats two in the bush. That's a really old saying. That was our trade. Now later on, if we would have had more time, we can see a resumption. We can see a resumption of that uptrend, and we finally did get a nice push up. Again, sometimes you're going to have to, instead of being constrained to the exits that are pre-selected on a broker, you can trade these on spread. You can trade these with extended binaries, because you can trade a binary option on Nadex for a longer period of time, and sometimes it's to your benefit. Let's look at this other trade. It's a little smooth trade, came in around here. We're already close to the 8. Relatively new resumption of a downtrend, and just a smooth ride down. They tried to knock us out around the end, but it just didn't happen. The exit would have been at the top of that candle, and it was a put. So sometimes the message here is, again, trading around the alerts and trying to figure out how to make the most for yourself personally of the data, of the alert, and the analysis that you're getting. Because this isn't about getting an alert or getting a signal and blindly putting on a trade and trusting someone else. Because trust me on this, long term, it's very difficult psychologically for someone to follow that. And also, this is why a lot of stuff that we use in order to factor this in, we don't get very in detail about the exact numbers, but we do get very detailed about what we're looking at on our chart. You guys could have known, even if you were sitting looking at the chart, that we're starting to see this pattern forming right here and went long with or without an alert. Why? Because we share the the logic that's inside that we're trading around anyway. So I guess you could say if there's a such thing as a black box scenario, Big Daddy and Green Arrow are probably like gray box scenarios. And the only reason that I don't go into just extraordinary detail with our numbers is um, somebody's got to take the opposite side of the trade. And the fact is, I believe that when you go into too much detail with the numbers, you kind of give the counterparties a little bit too much. You're giving up the edge, and that edge is there for all of us who trade these strategies. That's all I had for today. I want to thank you to everybody that's still out there purchasing the Big Daddy bundle along with the Green Arrow. I also done a little demonstration trade with the Green Arrow. I'm going to try and get it posted earlier. If you guys would love to purchase these strategies, they are available on our website, BinaryOptionstutor.com. See you guys on the next video. Again, like, share, comment, subscribe. If we've helped you, please help us by sharing this information with others you may know that may be interested in it. See you guys on the next video. Take care.